Okay, and welcome back, students who are taking financial accounting, and we're working on this series of videos for the Chapter 2 short exercises. So let's jump on down to where we left off, which is 2-12. Okay, it says here, prepare the trial balance. The accounting records for Audio Masters contain the following amounts. On April 30th, the accounts appear in no particular order. Prepare the trial balance for Audio Masters at April 30th. List the accounts in the proper order. Okay? So remember, a chart of accounts is nothing more than a listing of the general ledger accounts, but they are listed in order by assets, liabilities, equity, revenue, and expenses. Okay? When you create a trial balance, right? What you're doing is you have a listing of those general ledger accounts and the balances in the accounts. So basically you're taking your chart of accounts and adding in the balances. And it does have its own correct format, which I've discussed in the introductory videos, more towards the end when I went over financial statements in the theory videos, I'm sorry. But I'll try to go over it again here. So let's get to the next slide here. And so when we have a trial balance, we put the name of the country, the name of the company. So this is going to be, and I'm abbreviating, Audio Masters Inc. You shouldn't, right? Then you have the name of the financial statement, which would be trial balance, and the date, okay? In this case here, it's as of April 30, 2014. Now you could have just written April 30, 2014, and that would be just fine. Now, when it comes to a trial balance, you're going to have the accounts themselves. And on some trial balances, you actually have the account numbers, okay? It all depends upon how it's being printed out. So just realize that I could have a column here that has account numbers, right? And I list, the numbers alongside the accounts themselves, but I'm going to forego that, all right? You do obviously have to list the accounts. And then you're also going to have a debit column and a credit column. And when you get finished, you'll have an underline, right? Because you're going to have to do the math for that column. And then you're going to have a total amount, okay? Which would be a double underline because that shows the end of the calculation. So you'll have totals here, all right? And of course, your debits have to equal your credits. So now from the data here, where was I at? Okay, from the data here, they said, okay, here's the accounts with the balances, and they're not in any particular order. Okay, so, what you need to obviously start out with the asset accounts, right? So here, maybe it's better to go and say, okay, this is a revenue account, prepaid rent is an asset, accounts payable is a liability, equipment is an asset, dividends is an equity, utility expense is an expense, notes payable is liability, cash is an asset, rent expense is an expense, and common stock is an equity account. So we're going to take our asset accounts first. In this case here, we have prepaid rent, equipment, and cash. Okay, and we're going to list those first. The other way, we're going to list those first. Now, when we list them, and this is just as an FYI, the accounts are listed in, especially like asset accounts, are listed in the order of liquidity, meaning cash is already cash, all right? You can't make it any more liquid than it is, so we list cash first, okay? And prepaid rent would be the next most liquid account because all we have to do is call up and have them send a check back. But then equipment, would be third because we would have to actually sell the piece of equipment in order to get the cash back, to convert it into cash. So that's the way the accounts would be listed in order. It's more difficult to turn equipment into cash than it is to have, get a check for prepaid, and of course cash is cash. And since they're all assets, they all belong in the debit column. And remember, in each column, the first number, we're going to put a $sign where needed for the first number. And so our cash was $18,300, and prepaid rent was $7,500, and equipment was $21,000. Okay, so after our assets, next thing we look for is our liabilities. So we have an accounts payable and a notes payable. Okay. So accounts payable comes next, and then notes payable follows, and the normal balance of an accounts payable is a credit. Okay, so we're going to move over to the credit column for $1,700 and $11,500 for the notes payable, and notice the $sign for the first number in that column. Okay, then after liability accounts, we look for our equity accounts. Okay, so our equity accounts are dividends and common stock. We list common stock next. Okay, and then the answer has dividends. Okay, and to be honest with you, I don't like this. You will have a dividends account, general ledger account, but remember, as part of a closing process, you're going to close the dividends to a retained earnings account. Okay, and if you notice in the solution, we do not have a retained earnings account listed. Okay, this becomes a matter of, you generally, remember I had said, you have your chart of accounts, which is a listing of all of the accounts, all of them. Okay, and then your trial balance is a listing of all of those accounts with their balance. Well, if I have an account that has a zero balance, it should still be on your trial balance. Okay, but there are some computer programs, and of course if you're handwriting it, you're sitting there going, well, why would I have a retained earnings account with a zero balance? Why would I write that in? So you'll see on some trial balances where they actually don't list accounts that have zero balances, and I disagree with that. It only makes things a little bit more complicated. I think you should list all of the accounts that actually that are on your chart of accounts, with the exception being your post-closing trial balance, because all of your revenues and your expense accounts are zero, and because it's a post-closing trial balance. And I realize that you haven't gotten there yet. That's part of Chapter 3. But you'll see that in Chapter 3, when you close out revenue and expenses, they're going to have zero balances. And because the trial balance is going to be named post-closing, you know that those accounts should have zero balances anyway, so you don't need to list them. You're not doing any analysis from the post-closing trial balance. Okay, but for any other trial balance, you should have all of the accounts with their balances, even if they are zero. But in this case here, the solution doesn't have it, so they list dividends after common stock. And like I said, dividends should be closed out to retained earnings. Okay. But in this case here, we're going to have dividends being $22,600, and dividends would come after retained earnings. Right. Next is the revenue accounts. So what do we have for revenue? We have just one account for service revenue. So that would be the next account, service revenue. And that's a credit, and it's for $63,000. And then we have our expense accounts. So for our expenses, we have utility expense and rent expense. Oops. So um, change the color. Sorry. I have rent expense, and utility expense. And that is for 10,150 and for 18,400. Now, when it comes to expense accounts, the way they're listed is you generally list the ones first that are more that are used most often. Okay, and they, there is no right or wrong to the way expenses are listed, but um, the ones that are used most often, and the ones that have the greatest amount. So under expenses, you would generally see your payroll expenses first, because payroll is your largest expense. Then you'd see utility, then you'd see rent, then you'd see utility, and you'd keep on going down. And like your last one that you would see would be like miscellaneous expense, because you'd have very few transactions going into miscellaneous expense, and the amounts would be, generally they're small. Okay. But there is no right or wrong way to list your expense accounts. Yes, your account numbers should be listed like 500, 505, 510, 515, but the name of the account, it doesn't matter whether rent expenses account 505 or 520. Okay, but you should list them on your trial balance the way they're listed on the chart of accounts, and that's also part of why some trial balances put the numbers in, because you would see this as 505, 510, and so you'd see these account numbers going down, in order, beginning with ones, then twos for liabilities, 3 for equity, 4 for revenue, and finally 5 for your expenses. Right? So now that we've got all of the accounts listed and we have all of the balances for those accounts in the proper columns, we end up doing the math. So we add up all of these here debits and we come out with $91,200. Okay, and our credits, when we add those up, should be $91,200. Right, so our debits have to equal credits, and that's what our trial balance looks like. Okay, now if your debits don't equal your credits, then obviously you've done something wrong and you need to go back and find that mistake and correct it. Okay, so that's problem 12, and I'll see you in 13 in the next video.